Good morning, good evening, good afternoon, whatever time of the day that you're looking at this. My name is Marcus Miller, your local realtor at Keller Williams out of the Kalamazoo Market Center, and I'm with.
Jeremy Droback, Treadstone Mortgage.
First of all, we'd like to say thank you for looking at this in-depth home buying process video. And I can say right now that you would not be disappointed. You would not be disappointed at all. So without further said, we about to get right into it. Anything you want to say before we get into it, Jeremy?
No, let's roll with it. Thank you everybody for coming out and sitting through this. We're going to try to keep it entertaining, moving, and give you a quick down and dirty education on the home buying process. So let's roll with it.
Let's go.
Let's pull up the screen share here. All right.
All right, we about to get started. Before I get started, I just want to say that the home buying process depends on everybody's situation is different, right? Some people say that it can be easy, some people say that it can be hard, but nobody never said that it can be impossible. Okay, so with that said, if you looking at this video right now, whether you pre-approved or trying to get pre-approved or you 2 to 3 months out, this is the video for you, right? We about to go through all the steps that you about to go through when buying a home. And if we leave this, if you leave this presentation and you have a question, right, that means we didn't do our job. Okay, so the first thing I want you to do is write this phone number down, right? Because there ain't nothing like when I call you, you be like, who is this? I'm like, this Marcus the realtor. Oh, I'm sorry, I didn't have your number locked in. You'll just break my heart. You'll just break my heart. All right. Now, a little street credit about myself. I've been a realtor since 2022. I helped 23 families in the first half of 2024. And out of them 23 families that I helped gain home ownership, all 23 of them was with this man right here, Jeremy Droback. I cover the Kalamazoo, Battle Creek, and Lansing and surrounding areas. I love helping first-time home buyers who don't think that they can gain home ownership. And if you're a first-time home buyer looking at this, just know 95% of my business is from first-time home buyers. So everything that you're going through right now, everything that you're thinking, it's a high possibility that I've been through it and help people still get over their fears. Now, it's one thing listening to me and Jeremy tell you about the home buying process, right? But I think that it's going to hit different. It's going to hit different once you hear other people who've been through the home buying process tell you about the great loan programs or how the transaction was and stuff like that.
All right, so let's play this quick testimonial video for everybody. Sound good, Marcus?
We good to go?
All right.
42 years old, thought I would never be a homeowner in this economy, in this market, and my man Marcus Miller, he helped us make it happen, for sure.
One of the guys I work with told me about Marcus here. I was like, absolutely. So I started working with him, and then I don't know, for a month, and we had looked at a couple houses, 5 maybe. Now we're here now.
How much money we here now? Are you bringing to closing today?
$650.
What's the first thing you're gonna do when you get here?
Buy some groceries.
You put $4,000 down, and how much you bringing to closing today?
None.
So how much are you bringing to closing today?
$2,147.
Can y'all tell the people how many offers y'all lost out on?
Ooh. A couple.
It was like maybe 6 or 7.
Marcus and his team made it super easy. He gave me a date of Christmas. He gave December 1st. So
All together with your earnest money deposit, give or take, about how much you bring to closing.
$2,000.
Buying process wasn't easy, didn't go smooth or anything like that.
It went pretty smooth. I already knew that there were things that I needed to work on before I even attempted to reach out.
How much money you was bringing to closing, if you don't mind? Give or take.
$1,250.
So how much are you bringing to closing today?
$40.
Now, I know that some of y'all is looking at this video and be like, man, I know this person, I know that person. Like I said, don't you like trust is big. It's big. It's like I'm big on trust. It's hard for you to trust people, especially when you buying or trying to purchase a home for you and your family, which is a big investment. So by you seeing them people in them videos give real testimonies, right? If you don't know them, you probably know somebody that do know them. Just reach back out to them yourself and see if everything they saying is real. You know what I'm saying? This is not a presidential debate. We want to get fact checked. Okay. So without further say, we're gonna get right into the presentation. The first part is to get pre-approved.
All right.
I know you probably wondering like why does we got to get pre-approved, right? So later on in this presentation, Jeremy is going to touch bases on more of the pre-approval process since that's going to be the man that really do it. But what I will do is just go over what's in the pre-approval right quick. You can see the pre-approval amount is for $200,000. The type of loan program is FHA/MISTA. You got an expiration date, and you got whether renovation is as options or not.
All right. And this letter is a key ingredient for you getting out there and showing them houses, right, Marcus?
That's right. That's right. And on top of that, right, if you don't got a pre-approval letter, we can't even go look at homes because we don't know what you pre-approved for. We don't know what type of loan program you pre-approved for. We don't know the purchasing amount that you pre-approved for. Say that you tell me that you want to go look at $200,000 homes. Right? Why would I go show you $200,000 homes? Then you get pre-approved, you only approved for 120, 130. We just wasted both of our times. And without this pre-approval letter, the person who you trying to purchase the home from, he won't take you serious when you put an offer in.
So we'll send this pre-approval letter. That's kind of the ticket to shop for a house, right? But then we take it an extra step and we send you over this next document. You want to talk about that a little bit?
Yes, of course. Right here is called a prescription for success. This document tells me a lot, right? So once Jeremy sent over the pre-approval letter, I'm gonna see what type of loans that you are pre-approved for, right? So as you see in the first slide, we got FHA/MISTA. The middle slot, we got FHA, and to the far right, we got conventional. And this is a great buyer, leases up in November, right? This says so much about what you pre-approve for in the type of loans, right? Like you see right here where it says that the borrower's purchasing price, his goal is to stay under 150 or under, so that we know now that you want, after you had your Zoom call with Jeremy, that you said you comfortable with a 150 payment, right? So I'm gonna put you on the home search. Now I know what to put you on the home search, what price range that you're comfortable with.
Awesome.
Now, the reason I really like doing business with Jeremy is because he got a system. Not only is he a great loan officer, but he has a system. So after you get pre-approved, he's just not going to send you the pre-approval letter. He's going to put you on a Zoom call with him because we believe in doing business with people that we have seen before. Okay, so now after you got the Zoom call with Jeremy, he go over everything that you qualify. The first thing I'm gonna do is Jeremy gonna call me and give me the details and the rundown about the loan program and send me over your pre-approval. The next step I'm gonna do is I'm gonna send you this 45-minute in-depth home buying process video, which you is watching right here, right? So in that home process video, it's gonna tell you about the good, the bad, and the ugly. And I will not move on to the next step unless you watch this home buying process video, right? Because at the end of the day, you need to know exactly what you're getting yourself into. It's nothing like going out there on the scene, then we got to wing stuff. This right here is going to tell you the good, the bad, and the ugly. Now, after you watch this home buying process video, you're going to shoot me a text or a call to let me know that you watched the home buying process video. Then I'm going to ask you, do you have any questions about it? So that we all are on the same page, right? Then after that, it's going to be the buyer consultation, right? This is when we have them a Zoom call or a face-to-face. right? And this is where we're gonna go over everything that you're looking for in a home, and we're gonna have a couple keep it real moments so we all on the same page.
What is a keep it real moment, Marcus? Tell me more about that.
All right. So I got a question for you. All y'all looking right here by a show of hands. How many people looking for a 3 bedroom, 2 bathroom, full basement with a picket fence in the backyard? You're not gonna find it, right? So that's why we're gonna have them keep it real moments. And so because the way this market is right now, which I'm gonna get into later in the presentation, you're not gonna find 10 out of 10 things that you want in a home, right? You may find 7 or 8, which is really a 10. That's just the way that the market is right now. And you're not gonna find a $300,000 home and only want to make $150,000 payment, right? So this is part of this buyer consultation. We're gonna have a keep it real moments and find out exactly what's going on so we can help you, and your family out. Now, the first thing in the buyer consultation, we're gonna fill out a wish list, right? Everything that you want in the house: central air, first bedroom on the first floor, family bedroom, living room, eating, kitchen, right? So when you fill this out, this is how we're gonna come up with everything that you're looking in a home. And you see that little circle right there, Jeremy?
Yeah,
Where it
king
says
size bed.
king size, yeah, it says king size bed. I know what y'all thinking, like, why is this man asking me what I sleep in? What is he on? Just relax, and ain't that type of party. All right. This is why I'm asking this, right? So I'm gonna ask you, Mrs. Miller, what kind of bed do you sleep in? I sleep in a queen. Okay. When you purchase your new home, do you think you're gonna upgrade to a king? Yes, I do. So that just tells me we're not going to be looking at homes with small bedrooms that can't fit your king size bed, right? So this is why this is called a wish list, and that's why we're going to go over all the wish lists. Like if some people saying that they can and can't do a shared driveway. So if you tell me on your wish list that I absolutely would not do a shared driveway, then we ain't looking at homes for shared driveways.
Makes sense.
Now, the next step in the home buying process is finding your dream home. Okay? This is the part everybody wants to get into, right? So I'm gonna put you on the home search, right? 3 bedrooms, 2 bathroom, 2 car garage, etc., etc. We're gonna go over your needs and your wants, right? From there, I'm gonna send you over the top properties that you're looking for, right? This is your time right now to actually go through the properties that you're looking for and really see exactly what's going on out there. Look at the pictures, look at the type of loan programs and everything like that. Now, after I put you on the home search, the first one is you're going to send me like 4 to 5 homes, right? You're going to send me 4 to 5 homes. We actually going to get out there and look at it. Now, when we out there actually looking at these homes, after you send it to me, I'm going to ask you afterwards, rate this on the scale of 1 to 10, right? And as you see right here, 7 is something you would keep in mind. 8, something we serious about. 9 is something that's really a 10. And this lead back to what I said earlier, right? I believe if we go through with these homes and you find something that's an 8 or a 9, it's really a 10, because the chances of if you find a 10 is slim to none. So 8 or 9 is really is a 10. And if you do find that 10 in today's market right here, right now, everybody's going to want that property and you're going to be in the multiple offer situation. So I want you to be as open as possible.
Marcus, so I'm going to go back to the slides here, but I just so you're taking people out. So basically they're getting pre-approved, right? And then you're figuring out what they want to buy and what their needs and wants are and stuff like that. And then you're taking out and showing them houses. Like, how long does it take to find like the right house? Does it happen over the weekend? Does it take months? Like, what's the typical time frame? Can you give us a little more on what to expect there?
It all depends on the client by client situations. Like over my career, I took probably like 4 people out, and the first time that weekend they didn't find a home. Jeremy come in Monday morning, you got a couple pre-approvals on your desk, right? It all depends on a lot. I mean, not pre-approvals on your desk, but purchasing agreements on
Stuff
your
it
desk.
off. Right.
Yeah.
Yeah.
It all depends on the situations. Like it, we can we can actually go out there if you pre-approve me today and we can put you on the home search, go over the buyer consultation. We can find you a home as little as 2 to 3 days to get the offer accepted. It all depends on what you're looking for in a home. And it's a myth out there that's saying that when I go out there, I don't want to buy the first home. And I'm telling you this, don't listen to the people. If you go look at 1 or 2 homes and it's everything that you're looking at a home, you're going to say no just because it's the first home.
Right. Right. So it's just a matter of you just stick with those buyers until they find the right one, right? And then you're writing an offer. And sometimes I've seen you do that over the weekend in a day, and I've seen, and we've had them where it's taken 3 or 4 months. So I commend you for sticking with those buyers and helping them through the process because, we were talking yesterday and you knew every single buyer that we had 31 people or something pre-approved. You knew the situation with every single one, like even the ones going back to pre-approvals from June, May, you knew exactly where they were at. So for those of you watching Marcus, he knows his stuff. He goes the extra mile for his buyers and he doesn't give up until he finds you a house. So
Thank you. Thank you. Very true.
So you're showing them houses and you find them a house, and I'm gonna go back to the slide. So what happens once you find them the right house? Talk to us about what happens next.
The first thing I'm gonna do when I find them the right house is call Jeremy Drobeck and his team, right? I will not write an offer. Like everybody got systems, Jeremy. Everybody got systems, right? Me personally, right? I would not write an offer until I call Jeremy Drobeck and his team and we go over your numbers. We need to go over your numbers and make sure that you are comfortable with the payments that you're about to get, right? So if we go look at the homes you want to put an offer in, we run the numbers, and your payments is $2,000 a month. You say, "Wow, I can't afford $2,000 a month. I can't afford it, but I don't want to pay $2,000 a month." Well, that's good. That's good because now we know we ain't looking at homes at $200,000 no more because you can't afford a $2,000 payment, right? It's not the part that you can't afford. It's the fact that you don't want to pay $2,000 a month. So we know right now before we even put an offer in that this home is not for you. And you know what? That it's okay. And that is perfectly fine. Because what we don't want you to do is put you inside of a home, you get a payment that you're not comfortable with, and you foreclose. Right? I don't want that on my conscience. All right. So when we put in the offer in, the first thing we need is a pre-approval letter. That's why the pre-approval is so important. Because without the pre-approval, the seller would not even look at your offer because he won't consider that you're serious. Now, the next thing we're gonna have to do is put a contract in, right? The contract is the purchasing agreement. Okay. And we need to earn this money deposit. Now, how I tell people is I look at the earnest money deposit as a security deposit. Look at it as a security deposit, then it's contingencies in the purchasing agreement to make sure your earnest money is protected, right? And let's just say you put $1,000 for the earnest money deposit, we make it a close, and that $1,000 come off your overall price that you have to bring to closing. Now, so this is just some of the strategies that I use, right? This is the secret sauce to me, what I'm gonna do to help you get your offer exception, right? If you say something like, "I want to waive inspections," I would never recommend that. And if you do say that you're going to waive inspections, I'm gonna have you sign this piece of paper that I advise you not to waive an inspection, right? You can offer more than the purchasing price and ask the seller to contribute towards the buyer's closing costs. You can add a clause that if the repairs are under $1,000, the buyer would not request any repairs. Stating that the home inspection is for buyer's purposes only while maintaining the right to walk away without requesting any repairs.
So do you do this stuff all the time, Marcus, or is it just kind of like one-offs depending on the scenario? How do you determine like which, kind of tactics you're using?
It all depends on the buyer. This is a case by case, client by client situations, right? Some clients risk factors is lower or higher than the others. Some buyers got a whole family full of contractors and they really worry about certain stuff because they know that as long as it ain't major or safety health issues, they really ain't tripping. Or some buyers is more financially put than others and they can do other stuff. So it all depends on a case by case situation.
Okay, cool. You got some more here.
Got the escalation clause, appraisal gap, a quick home inspection period, or even offer a larger earnest money deposit.
Great. So you throw the offer in, you negotiate it out, and the offer gets accepted, right? And so now we're under contract
Let's
and
go.
rolling.
Let's go. Yes, after your offer get expected, the first out-of-pocket expense that you're going to come up with is the home inspection and the appraisal process. Okay. Now we about to talk about the home inspection. Now, the home inspection, three things can go wrong during the home. Three things can happen during the home inspection. Everything is fine, right? Then we move on to the next process. It went poorly, and we release the earnest money contract back to you, right? So now let's just say that we go through this home inspection period and everything like, I can't do this. I won't do this, right? Yes, you get your earnest money deposit back, but the money that you spent for the home inspector, he did his job. So you won't get that back. You rather lose $300 to $500 on a home inspection, or you rather miss out and have $100,000 worth of damage on your house when you move in. The home inspector did his job, right? Now, number three, we can do some negotiations to satisfy the issues to be addressed. And number three is the likely situation that do occur. Okay. So with that said, the home inspection is real important because it's just like going to get a new car. It looked good on the outside, but until you get diagnosed, you don't know what's really going on with the home inspection with the car.
And Marcus, how much, so the home inspection, just for the people that don't know, like the home inspector is like a third party, like typically it's a former contractor or something, but it's a person that goes through the house and does, they spend 3 hours there going through the house, right? Looking for things that are wrong with it. How much does that normally cost? You know?
Yes, I done seen like I have a preferred home inspectors. My preferred home inspector charge anywhere between $300 if it's cash, $325 if it's credit, but it all depends on the other services also. Like you may want a radon test, you may want a pest inspection and stuff like that. So the prices increase just a little bit. So anywhere between $300 and $450.
So not bad considering there, somebody spending $200,000 on a house, a couple $100 to make sure everything's good to go. That can save thousands down the road. Would you agree?
I totally agree. That's going to be that right there. It is a blessing, right? It's a blessing because you don't want to get down the road, waive the home inspection, and don't get it over a couple $100 when he can tell you exactly what's going on with the property, so you can make the best decision for you and your family. So don't never skip the home inspection period. Always go through it. Them couple $100 that you're spending can be a life-changing event.
Awesome. Okay. And I know this next slide we're going to pull up is about the appraisal process. And, we as the lender are the ones ordering the appraisal. That's obviously a big part of what we're looking at when we're working on getting the loan ready to close. But it comes back into play for you depending on what that value looks like and how that appraisal reads. So why don't you talk a little bit about that and how that can affect the negotiations kind of midstream?
Yep, I sure will. Basically, what's going on was this. Let's just say you buy this house for $100,000, hypothetically, $100,000, right? You get it under contract. You put the earnest money deposit, went through the home inspection, everything. Then this person come in, the appraiser says it's only worth 90,000, right? Now we're in the situation where you could bring the extra 10,000 if you want to. By the show of hands, who's going to do it? No, I'm not. Right. No, nobody wants to bring the extra 10,000. Okay. All right. Cool. Right. So that way we can come in and go back and ask the seller, like, listen, the appraiser said that your home is only worth 90,000. We would like to go down on the price because since that's the true value, right? Or if he says no, we can walk away from the deal, or you can bring the extra 10,000, right? Me personally, I ain't never been in a situation, knock on wood, where the appraisal came low and the seller did not drop the price, right? That's just me personally, right? But not saying that it can't happen, right? Or the appraiser can come back at value, but you may have to have some repairs, right? And what I want to tell y'all is this. It's a difference between when you ask for stuff from the home inspection and repairs and when the appraisal asks for something for the repairs to get done. When the appraisal asks for something to get done, basically we telling the seller is this has to get done in order for us to close the loan, right? So a lot of negotiations can come back during this process right here, but this is why it's important to have a good realtor, a good lender, so we can work through all of these problems.
And I think that's really the key. The appraisal can sometimes pose some challenges, but we work through it, and we renegotiate, we jump through hoops, and we usually figure it out, and that's the key ingredient is the right team in place to do that.
Absolutely.
All right, last but not least.
Last but not least, the favorite words that y'all want to hear is clear to close. Clear to close. Let me say it one more time. Clear to close. All right. This is where all your obligations to buy a home has been fulfilled. Now, this doesn't mean to go out and stop working. This doesn't mean to go out and still buy that Bentley that you was waiting to close on the home, right? This is the time to just get ready. First of all, you about to get ready and do something that you've been wanting to do for a long time. Purchase your own home, right? Within 72 hours, we get to go do a final walkthrough. Make sure all the coppers are there. Make sure all the water, the basement is not flooded. Make sure the house was in the same condition is in as if when you first seen it or last seen it, right? Me personally, I like to do a walkthrough 2 days before closing and a day and an hour before closing to make sure everything is intact. And if it's not, they give me time to negotiate on our way to closing. Then you receive your keys. We take some pictures. You give me a testimony and a 5-star Google review. And then you become a new homeowner. Congratulations.
All right, awesome. And Marcus, I'm gonna pull this next slide up, but if they've got questions for you, what number do they call?
Area code 517-775-0511 or email me at marcusmiller@kw.com.
All right, awesome. Let's get into a little bit more of the pre-approval stuff. Sounds good?
Sounds good. Let's go. Let's keep it going.
All right. So let's go through some of my street cred. I've been doing this, actually the slide's a little outdated. I've been doing this now 24 years. So since 2000, I've gotten the business as a realtor. I've owned multiple rental properties over the years, just done a lot of business and helped a lot of families just make their dreams come true. So I want to talk about, Marcus, I want to talk a little bit about just kind of the why behind this. I mean, you're super passionate about helping people buy a home that didn't think they could buy a home. I'm passionate about it, and I want to show people some of the why. So, to me, it's about wealth building. It's about setting the family up for, to build some generational wealth and really start to get their financial house in order. A lot of times when people are renting, they're struggling with that to a certain degree. And so the way I kind of teach this is, number one thing, buy a house. And the reason for that is, you're either renting or you're either paying your landlord's mortgage or you're paying your mortgage is the bottom line. So why not pay your mortgage? And I'm going to show you guys some numbers on why that makes sense. But number one, buy a house. The next most important thing is to have some emergency money. You know, life happens. Whether it's the furnace going out on the new house or the car breaking down or or a medical issue that comes up or job loss. You want to have, people want to have some kind of emergency fund. The way I teach it is to look at your monthly budget and have at least 3 times that monthly budget kind of saved up in a side account for when life happens. So if the monthly budget's $3,000 a month, the next thing to shoot for would be to have at least $9,000 set aside in some kind of emergency fund. Once people have the house, they got the emergency fund, then that's when I would move towards the retirement side of it and saving 20% of the take-home pay towards retirement. And then from there, if there's still money left over, investing in the stock market or mutual funds and things like that. So let me show you guys a little bit more of these numbers. So why buy a house? Why buy a house? So typically the house is going to go up in value while you're paying the mortgage down. That's the root of it. There's some tax benefits. You're building equity. It's almost like a forced savings account. The other side is just the straight up freedom, right? Like you want to get a dog, you're welcome to get a dog. It's your house. You don't have to ask for your landlord's permission. You want to get a cat, you want to get a roommate. Like you can really truly do whatever you want. You want to paint the walls purple or green or red or blue or whatever. It's your house. You can do what you want with it. So there's something to be said about the freedom that a house brings for people. So interesting statistic I saw. So in the US, the average net worth of a homeowner is $396,200. So almost $400,000. The average net worth of a renter is $10,000. And that's why I say it's about building that wealth. Home ownership is about getting in there and building that wealth. So check this out. So we kind of talked about this, but when you're renting, your rent goes up, right? And when you have a mortgage, that mortgage is going to be kind of locked in. That principal and interest isn't going to change. So your rent can go up when you're renting, which gives kind of more instability to the financial picture over the years. You don't gain any equity. And again, the pet thing, I kind of mentioned that, but when you're owning a home, the home's going up in value, you're paying the mortgage down. That's why investors or landlords, that's why they're in the game, right? The tenant, so the renter, is paying down the mortgage for the landlord, right? So that when an investor buys a rental property, that's why I had a rental property, right? My tenants were paying the loan down while the house was going up in value. And so by owning the home, you're taking advantage of that situation. You're building that equity. So I get this a lot right now. It has to do kind of with, the current status. Like home prices have gone up quite a bit over the last few years. Like the rates have gone up a little bit, and there's the affordability question comes into play, and people question themselves. Like I've heard people say, is the market going to crash? Are prices going to go down? And so let's just look at the data, right? So this chart here shows, it's been tracked since the 40s on what home values have done. And so those numbers that people are looking at, that you're looking at, are showing how much homes went up in value for any given year. And you can see the green years, the homes went up in value. And there's only a few years in the United States where overall home values went down. If you look at any 10-year period of time, the 1940s, the 1950s, the 60s, 70s, 80s, and so on, like any one of those given 10-year periods, homes went up in value. We had appreciation. So this is truly really the why. If that home, if somebody buys a $100,000 home and values go up 5%, that home's gone up $5,000. And then if the next year they go up 5% again, it's gone up another $5,000. that same example in 2021, we saw 19% appreciation. That $100,000 home turned into a $119,000 home in just that year's period because of this appreciation. So here's an example, and this is just a $300,000 example with 5% down. But if the home went up in value 2%, right? So the buyer put $15,000 down. That's 5% on 300,000. They put 15,000 down, and if it went up just 2%, that 300 turned into 30,000. So that $15,000 investment essentially doubled in value, or doubled because of that equity gain. And if we have a 5% return, which is really more typical, right? That 15,000 would have turned into 75,000. This is really truly the why behind home ownership and why to stop renting. Marcus, you got any questions on that? Did I cover that well?
Yeah, I was trying to wait till you get done. I was trying to wait till you get done. But can you touch base on a situation that a lot of people don't know about? When they hear the thought of building generational wealth through home ownership, they hear it, but I think it's a lot of people out there that just really, they hear it, but I don't think that they understand, like, America was built on home ownership.
Right.
Right. So can you explain a situation like a person who bought a home for 100,000, just a hypothetical situation, a person who bought $100,000 home, lived it for 30 years, passed away, and it was in a kid's name. What type of stuff or things that they can end up doing with the money, as far as the kids can sell a house, go to college, go start a business, or anything like that?
Yeah, sure. I mean, so when I say generational wealth, what I mean by that is that the person that passes away has money to pass on to their heirs, right? So, if somebody's, because when you look at the statistics, right, like 400, the average homeowner's net worth's worth 400,000 versus the renter 10,000, right? So let's just say you got somebody that rents their entire life, and they're not able to stash a lot of money away into retirement and stuff, and then they retire, and they eventually pass away, right? Like, because they were renting, there's no equity there. There's nothing there that's going to pass on to the kids or the heirs. And maybe there's some 401k money, maybe there's not, but I mean, they're going to have been living off, in many cases, living off that, any retirement accounts that were there. The Social Security that people get just straight up ends, right, when they pass away. So there, in many cases with a renter, there's nothing there to pass on to the people that are left, to the heirs of the estate. Where with home ownership, what that does is, let's just take somebody, let's just say they're 25 years old, right? They're early in their life, they're a first-time home buyer. A lot of the people that me and you have helped are in that kind of demographic, so to speak. So they're younger, they're starting out in life. Some of them have some kids, some of them don't, right? But they buy that house and they move into it. Now, realistically, they're probably going to upgrade in house over the years and slowly pay it down. But, if we're doing, say, a 30-year mortgage, so let's just make this really, really simple. Let's say you got somebody that's 25 years old, they buy a house and they live there for 30 years, and they just pay on that mortgage every single month. Well, 30 years down the road, they're going to have that house paid off, right? So maybe the mortgage started out at 100,000, just to use really simple numbers. Say they had a $100,000 house, $100,000 mortgage. Now 30 years later, they've paid it off. They owe nothing. And that house has gone up in value, at whatever rate it went up, 5% a year, 10% some years, maybe 1% some years, right? But that house has gone up in value. Now, 30 years later, let's say the thing's worth $400,000, right? Because it's 30. I mean, you guys see how prices go up, right? So 30 years later, that house is worth $400,000. They've also now paid off the mortgage, right? So if they kind of follow what I've been kind of teaching in that beginning slide, is they bought the house, they paid it down in value, they got their emergency fund, they've been putting some money into retirement, into 401ks. Now they got a paid for house. they can essentially live off the, maybe they're at retirement now and they can live off their Social Security check. Like the retirement accounts are still out there to help pay the bills. And then at some point they pass away. Now the kids are selling the house. The kids are getting the $300,000, the $400,000, whatever it is from the sale of the house. There's retirement money that's getting passed on to the kids, and maybe the estate's worth $500,000, and you got two kids splitting that, and each kid gets $250,000. Like, what a way to set your kids up for future success, and your grandkids for that matter, right? And that's what I talk about when I talk about generational wealth. So many people haven't had that, right? They haven't seen that. They haven't gotten that kind of money from their parents, but home ownership can help people obtain that.
Thank you for touching base on that, Jeremy. I think everybody really needed to hear that.
Yeah. That's the end game, right? That's what we all want to be able to do someday. So let's talk about what it takes to get pre-approved. I'm gonna pull the slides back up here, and we're going to get into a little bit more on the pre-approval process. Now, some of the people watching this video, we've done the pre-approval, right? And they've already gone through some of this, and we did our consultation and kind of set everything up. So some of this will be a little bit of reiteration from what we covered in that meeting that we did. And for the people watching this that haven't met with me yet, this is some of what you're going to go through with this pre-approval process. So as Marcus walked you through the steps of the home buying process, step number one is get pre-approved. So let's take a deep dive into getting pre-approved. So we're going to pre-approve you. This kind of slide gets in a little bit more detail on the actual loan process part. So you get pre-approved, you find a house, and Marcus kind of covered all of that. Well, then what happens, right? So once you get that accepted offer, I'm going to have a bunch of stuff for you to sign, all the loan documents, the loan disclosures. We're going to do the appraisal, title work. You're going to get your homeowner's insurance. We're real big on my team with proactive communication. We'll call you every Tuesday updating while you're going through this 30-day long process. But basically what we're doing is we're getting it all ready for underwriting. Underwriting is where somebody else, an underwriter in the company here, takes a look at your file, make sure we got all our I's dotted, T's crossed. A lot of times there's some back and forth there where the underwriter will say, hey, get me another pay stub, get me this. We got to verify this deposit. There's some back and forth where we kind of gather up final documents and a lot of buttoning up. Again, I'm making it sound really easy, but that's a 2, 3, 4 week long process from when that offer is accepted to when underwriting finally gives those magic words Marcus was talking about, the cleared to close. Cleared to close. So once the clear to close issue is issued, we do some back and forth with the title company, and that's when you get the keys. But my point in showing you this is there's a whole bunch of behind the scenes and stuff that we're doing once that offer is accepted. So what's the benefits to getting pre-approved? I mean, one, you need to know what the numbers are, right? Marcus kind of mentioned this, but like, I'm going to ask you, one of the first questions I'm going to ask you is, where do you want your house payment to be? And you're going to say $1,000 a month or $1,500 a month or $2,000 a month or whatever the number is. Like, it doesn't matter if I can approve you for, a $500,000 house. If you don't want a $5,000 payment or a $4,000 payment, then we need to be in your comfort zone, because you have to make the payment, not me. And that's one of the key ingredients with this pre-approval, is just going over the numbers and what to expect on the payments and the down payment side of things, so that you're all in numbers. And we just it gets you set up to be able to make a good offer on a property. All right. So what are we looking at when we pre-approve people? And I like to look at this. There's kind of 3 legs of the stool is the easiest way. And all 3 gotta be in place for the stool to stand up, right? If you're missing one of the legs, the stool falls over. So the 3 things we're really looking at, we're looking at people's income, right? So that's how much they make, what they're making on the job, Social Security, child support, alimony, retirement income, like whatever's out there that's income, income coming in to pay the bills. We're looking at where it says cash. That would be like your down payment, other assets that are there to help just make for a cleaner file. So retirement accounts, not that we necessarily need to use them for down payment, but it helps to to improve the situation when there's other assets. And then we're looking at credit and debt. And so that's where we're running the credit report. We're looking at the credit score. We're looking at what's outgoing. And so that income versus the outgo is really what is the main factor that determines how much somebody's approved for. Let's get a little bit more into this. So income, credit, debt, cash, what we're looking at. Let's talk about credit first. So when it comes to credit score, and I'm going to show you guys some of the loan program stuff, and we'll talk a little bit about the minimum score stuff. But when it comes to credit, like we really are pretty flexible on this. But 35% of the payment history, that's the main thing that makes up a credit score. It's so important if people are looking at this video early on in the process or even during the process, pay your bills on time. A late payment can just totally destroy a credit score. I've had people make, with late payments that, one late drops to the score 20, 30, 40 points. So payment history is 35% of what makes up that credit score. The other big factor is the amounts owed. So if somebody has a credit card and it's close to the limit, that will damage the score. One of the tricks we'll use to improve somebody's score is a real quick pay down on a credit card can make a major difference. So let me give an example on that and what I'm talking about. So let's say somebody has a $300 a credit card with $300 limit on it. You want to stay at 30% or less utilization is what it's called. So in that example, you want to keep the balance under $100, and that'll really help boost the score up. Again, 30% of what this credit score is made up of is that difference between what's owed on the credit card and what the limit is. I've even had people call in before and increase their credit card limits, and it can increase the credit score. So other things, length of credit history, new credit inquiries, credit mix. But again, these two main things are pay your bills on time, keep your balances on your credit cards low, and you should be in pretty good shape on the credit side.
I got a question for you, real quick, Jeremy.
Yeah, go ahead, Marcus.
Can you explain to the people that's looking at this and thinking about getting home ownership how a credit rescore could work or couldn't work?
Yeah. So I think that actually came up with one of our customers yesterday that we were working with. And where the credit rescore comes into play is mostly in that amounts owed part, that utilization of those credit cards. So what we can do is, let's just keep with my example, right? Somebody's got a credit card with a $300 limit, and they've got it maxed out, right? They owe $290 on it, let's just say. So it's maxed out. It's above that 30% utilization. Like that's going to damage the score. Even though they only owe $290, it's not that much owed. It's a maxed out card. So if they were to send in, say, $200 and pay that card down, so now they owe $90 on the card. Now they're at that 30%, under that 30% utilization. We can have them send a statement in showing they paid down the card, and we can force the bureaus to rescore the credit by sending it in and requesting a rescore on it. And so the bureaus will then basically calculate a new credit score based on that lower balance, and it can jump the score up pretty quickly, like almost overnight.
So basically they don't have to wait the 30 to 45 days to figure out.
Right. The benefit there is we're speeding up that process. Otherwise they pay it down and then they got to wait for 30 days for it to report to the bureaus, and then it'll affect the score. So we can speed it up with a rescore.
Gotcha.
So we don't always do that. It really depends on the situation, how much it's going to improve it, where it's going to get them to. But that's a quick trick for somebody in a pinch. I'm always hoping that people are going to reach out to us, months before their lease is up so we can get this all going, right? But if they're in a pinch where they got to move or something, that rescore can help out.
Thank you.
Anything else on credit you want me to cover there?
Nope. No, you're doing a magnificent job.
All right. Sounds good. So let's get back to the slide here. All right. So that's credit. Let's talk a little bit more about income. One of the big myths out there is people think they got to be on the job for 2 years in order to buy a house. That's simply not true. Um, Time on the job matters, but there's no 2 year on the job requirement. We do want to see a 2 year employment history. So, but that doesn't have to be at the same job. And if somebody was in college or something and got a degree and then entered the workforce, we can even count the schooling towards that. So I've done loans for people where they have a job offer and they have an offer letter and they're going to start in 30 days. And we can use that offer letter for pre-approval. So it's really, they do not have to be on the same job for 2 years. What we can't have is somebody that's never worked a day in their life and they're 30 years old and they've been sitting around at living with mom and dad playing Xbox for the last 20 years, right? Or whatever. And they want to move out and they get a job to buy a house. Like that's where we'll need some time on the job. But it certainly doesn't have to be at the same employer. We can use all sorts of different types of income. So whether they're on a salary, hourly, commission, bonus, self-employed, if they're getting income from different assets, from rental property, child support, alimony, like all that stuff can be used. There's different rules on how much we can use and when we can use it. For example, for a self-employed person, they do have to have 2 years as being self-employed because we got to be able to run an average on their income. For your hourly employee, that's certainly not the case. But the income's different for everybody. And the bottom line is, as part of that pre-approval process, we're going to look at the income documents, going through the income. And if for some reason we can't do it, I guess this goes for credit too, right? I mean, if we can't do anything, we're gonna help give instructions on let's do this. Let's come up with a game plan to get you ready to buy a house down the road. So for the people that we already pre-approved that are watching this video, if the income changes, call me. Let me know. Hey, I got a raise. Like a $1 an hour raise can increase somebody's purchasing power by about $15,000 worth of house. So if this income changes, let us know and we'll update the approval letter. All right, let's talk a little bit about assets and down payment. When I show you guys loan programs, we certainly have loan programs that are very low money down. Other people have money they want to put down, right? Especially if it's your second house you're buying, you'll probably be selling one and using some of the proceeds to put money down. But down payment can come from, money in the bank. It can come from down payment assistance programs, retirement accounts, people cashing out different investment accounts, gifts, sales of boats, cars, trucks. So all different sources for down payment. Let's get into these loan programs. This kind of shows you some of our minimum requirements, and this is all kind of subject to change. And you really, my disclaimer is we got to pre-approve you, right? So we got to get all your info, run all the numbers, and pre-approve you. When we talk about loan programs, conventional is a big one, is kind of like the main program that most lenders try to approve for. Minimum score 620, minimum down payment 3%. FHA is a really popular government loan program. We can actually take that down to a 550 credit score, 3.5% down. For the veterans out there, the VA has an awesome zero down program. There's a rural development we'll talk about. Jumbos would be like your $1 million loans. And then we're going to talk a little bit about renovation financing and down payment assistance. So real quick on FHA, the government wants people to buy houses. Like when somebody buys a house, it's a huge stimulus to our economy. They're out, buying stuff for the house almost immediately. People will leave that closing, they'll go to the house, and then their next stop is Home Depot, Lowe's, Menards to start, to get some blinds, or, they want to redo the bathroom or whatever. So the government's created, because it's such a stimulus to our economy, the government has created loan programs to help people purchase homes. FHA is one of those programs. It's basically 3.5% down. There's a special for the HUD homes out there. Marcus can show you where to find the HUD homes and stuff, but those can be done with $100 down. We can utilize the MSHDA down payment assistance with it. There's other assistance programs. It's the most lenient on credit. Again, we can do those down to like a 550 credit score. It's flexible on the debt to income ratios, which is determines kind of how much you can qualify for, and then allows the seller to kick in up to 6% towards closing costs and whatnot to assist there. So it really truly is one of the best programs out there is FHA, because it's just so lenient for people. The conventional loan program is certainly there for first-time buyers. It's more strict on credit. And so even though the minimum score is a 620, a lot of times this conventional won't approve until you get into the 680, 700, 720 range, especially if it's real low down. So it's just more picky. A lot of times we're doing conventional more on the move-up buyer scenario. So statistically, somebody will live in a house for 6 years, and then they're basically calling Marcus and me back up saying, hey, we outgrew the house, or it's a divorce situation, or somebody passed away, or whatever the situation is, they want to sell and buy something different. And so at that point, right, and this is just an example, but they bought the house for 100, now it's worth 150. Marcus is selling the house, helping you sell the house for 150,000. You've paid the loan down to, 90,000, let's say, and you pocket, 40, 50 grand that you now have to put down. When we got that large down payment, that makes conventional more attractive for people. And so a lot of times we're doing this program on the next house, the second, third, fourth, fifth house we're doing for people. But we can do down payment assistance with it. Gifts are allowed. What people like about conventional is it's a little easier on property condition stuff. So when that appraisal's done, Marcus talked earlier a little bit about repairs. When that appraisal's done, conventional is going to be a little bit more lenient.
Mm-hmm.
The rural development, this is a zero down program through the USDA. The one catch with it is there are area restrictions. So like I'm in Kalamazoo, right? So no city of Kalamazoo, no Portage. In the Battle Creek area, no Battle Creek, no city of Battle Creek. Up in the Lansing area, like no Lansing, no East Lansing, no Okemos. But the outside areas are all eligible, right? So as soon as you get outside of town, those areas open up, and this zero down program is super attractive for people. For those of you that want to look at the maps, go to rdarea.com and you can pull up the maps from there. The VA, for the vets out there, again, I was in the Marines. I love helping the veterans out. It's a zero down loan program with no PMI. If you were military, this is definitely something we'll be talking about. Also, for the 100% disabled vets in Michigan, they're exempt from property taxes. So another huge benefit for veterans. All right, so I want to show you guys some stuff on renovation loans. This is something that a lot of people don't know exists. And when you're, we pre-approved you for a house, you're out there looking, and you're going to come across these houses that have a tarp on the roof, water in the basement. We joke around, we call it the butt loan. I love the house, but it doesn't have a garage. But the bathroom's outdated or the kitchen's outdated. With the renovation loan, we can fix those butt issues, right? We can fix the tarp on the roof. And essentially well, let me show you a couple examples of some that I've done. So this was a house that we did. This was one of the worst ones I've ever financed on a renovation loan. I had 3 appraisers walk in this house, open the door. They walk in, they turn around, get back in their car, and called me and said, I'm not appraising that house. I'm too scared to go into it. It was that bad. I didn't even have any inside photos. It was so bad, the realtor didn't take any inside pictures. But we got this one done via the renovation loan. Here's another one. This was one in the Kalamazoo area a few years back. There was a bunch of flooding, and this was what was going on in the basement of this house. So this was kind of like 24/7. There was a hole in the foundation, and it was leaking. And so nonstop water coming in. We got a bid from a basement waterproofing company and financed in the fix for that. At the same time, they redid the kitchen at the same time. So really good way to get, for somebody to get a good deal on a house. So here's how these go. So buyer finds a house, there has some issues. They put an offer in on it, and then they can get a bid from a contractor to fix whatever the issue is. So new roof, new kitchen, the water in the basement, whatever the situation is, they get a bid from a contractor. We then do the appraisal. If there's any other issues the appraiser has, when that comes back, we can have those added to the bid. But then basically we close. When we close, we're cutting a check to the contractor for half. So if the bid's 30,000, we cut a check to the contractor for 15,000. Contractor goes in there, does the work. We reinspect the property, make sure everything's done, and then pay the contractor the other 15,000. So it's a really smooth process. We can do it on purchases and refinances for that matter. It's 3.5% down. So price of the house plus the renovations, 3.5% down on that. And on those HUD homes that I mentioned, we can do those with $100 down. Marcus, you got here's an example of stuff we can do. We kind of already talked about this, but roof, gutters, downspouts, HVAC, plumbing, electrical, flooring, structural stuff.
Yeah, basically what I want to tell the people, Jeremy, is this, right?
Yep.
I like to use this scenario and situation. Say you pre-approve them for 150,000. They find a home for 100,000. They go inside the home. They like this home, but they don't like the kitchen. They like this home, but they don't like the flooring. They like this home, but they don't like the bathroom, the butt loan, right?
Yep.
As if you were saying. So we get the licensed general contractor to come in there. Everything that you're going to do with the property, he's going to itemize everything. He's going to give it to the appraiser, and the appraiser going to look at it and give you a value as if it was already done. You're going to close on that loan as is condition, right? So say that you bought it for 100 and you put $50,000 into it, right? So now you're making $150,000 payment, mortgage loan payment, but it's the way that you wanted to make the house. You close in as is condition. Then the contractor that you got to do a work got up to 6 months to complete the work. And in some cases, what Jeremy about to tell you right here is you'll be able, if the house, like the house you just showed us, is in such horrible condition, you can wrap some of the rent payments up inside the loan.
Yeah, so let's talk about that real quick. So what Marcus is saying there is if the house is not habitable, so say it's down to the studs and you can't live there, right? Because you got to rent somewhere at the same time, we can take, if that payment's $1,000 a month and it's going to take 6 months to do the work, I can finance an extra $6,000 into the loan, and then we use that $6,000 to make that $1,000 payment so that buyer can keep paying rent and while the house is under construction and being done. So it's really a win-win program for people. It really, really is. And I've seen people get stellar deals on properties because nobody else wants to buy it because of the water in the basement, because of the tarp on the roof. And they can walk in there and get a steal of a price on it, finance in the renovations, and have a beautiful house when it's all said and done.
Absolutely.
So, all right, I want to cover down payment assistance here real quick, and then we're going to wrap this up. So just a couple more minutes, but down payment assistance, Michigan has a really good down payment assistance program for people. There's other programs we do as well, but the big one is this MISHTA program, and it's available for first-time buyers and move-up buyers in certain areas. They have what's called targeted areas. A lot of the state is targeted, so it is available for move-up buyers as well. The state basically gives us $10,000 to play with in down payment assistance funds. Now, in order to access that $10,000, the state requires the buyer have 1% of the price, like skin in the game. So the buyer's got to do 1% of the down payment. And now we'll get the rest of the down payment. We'll reach into this $10,000 bucket of money MISHTA has, and we'll get it from them. Then what we can do to take it even a step further is there's typically some leftover down payment assistance funds there. We can use that to cover closing costs so that Marcus doesn't have to negotiate in the seller paying closing costs, which helps sweeten up the offer if you don't have to ask the seller to pay $6-7 grand towards closing costs. Couple catches with the program. And I want to say this too. This $10,000 is not free money. It's not a free handout. It's an interest-free loan. So you don't make any payments on it. You don't pay any interest on it. But someday when that house is sold or refinanced, the state gets paid back. That $10,000 gets paid back. So there's a couple catches. Number one is the price restriction. The state has a price cap on it at $224,500. So the price, the max price, regardless of the buyer's debt to income and assets and credit and all that, is $224,500. There are household income limits, although they're very flexible. In a lot of areas, they're 126,000 plus. So there's income limits, but they are pretty flexible. The state figures, you know, if you're making $300,000 a year, you can afford to put some money down, is the bottom line. It's primary residence only. So no multifamily, no second homes, no investment properties. And the other thing is they look at household income limits. So we're going to ask for, if you got another adult living with you, if grandma's going to live with you, we got to get grandma's income info to make sure the household is under the income limits. Grandma doesn't have to be on the loan and sign on the loan, but we've got to look at all the income for the household. Marcus, I know you're a huge fan of this MSHDA program. Is there anything you want to add on that?
Yes. Can you explain to the people that's watching this video why MSHDA is asking people to pay it back? Because I know they learned, like, why are they giving us money and we have to pay it back?
Yeah, I mean, what that comes down to is just they're reinvesting the dollars, right? So the money goes out, and then people, you know, eventually people pay, it gets paid back, and it replenishes the coffers so that process can be repeated and help other homeowners and stuff, or home buyers with it. So you know, it's really a good program. Like, I mean, it's all the way around a great program. I know you've had a huge success with it. I have as well. Let me run people through an example here of how the numbers kind of look on that. Pull those slides back up. So right here's an example kind of numbers. And again, this is just an example. Everybody's scenario is going to be a little bit different, but just kind of some raw numbers to look at. What we're saying here is we got a $140,000 price. And in this case, Marcus negotiated for this example buyer a $2,000 credit from the seller for closing costs. Now, on that 140 price, I'm going to need $4,900 down, and we're just going to say we got $8,500 due in closing costs. So here's how it works. So we need $4,900 for down payment. We got $8,000 in closing costs that are getting charged. We got the seller kicking in $2,000 of that. We got the state kicking in $10,000, and the buyer brings in $1,400, which would be the 1% of the 140. Right? And that's kind of how we get that all to zero out. But that's a heck of a lot better than telling a buyer they got to bring $13,000 into closing.
Absolutely.
And on the payment end, again, as an example, we're saying the principal and interest is $880, taxes $250, insurance $125, and PMI or mortgage insurance, because the buyer's not putting 20% down, $62. So like, the way this kind of works is these are the different variables, but we'd be billing for a total payment of $1,317. So again, just an example. We'll run through numbers when somebody pre-approves, you know, for their exact scenario. And Marcus, you're great about asking before you put an offer in for these numbers for whatever particular house and buyer it is.
Yes, I would love for my buyers to understand exactly what they're getting into before they get into it, and make sure that they're comfortable with the payments.
Right. So again, there are other down payment assistance programs out there. I did one just recently in Detroit too, where we got like 25 grand from Detroit. So there's other stuff, kind of case by case. That's something we'll talk about during pre-approval. I threw this slide on here, Marcus, for the move-up buyers that, you know, if you got a move-up buyer that, or somebody watching is a move-up buyer that needs to be contingent on the sale of their current home, we do have a bridge loan available where oftentimes we can kind of skirt around that requirement to be contingent, and that house can get sold later. I want to talk real quick about documents needed. When you know, we're asking people for stuff, it's very important they send everything in. We have some thresholds of what we need for pre-approval, but then more we need for underwriting, and we'll be asking the whole time for these different sorts of things. And again, everybody's a little different, but driver's license, pay stubs, W-2s. Sometimes we need tax returns, bank statements, retirement account statements, child support orders, divorce degrees. Like, we do dig into people's finances. The bottom line is we're lending out hundreds of thousands of dollars, and we got to make sure you can repay the money. That's what it comes down to. So just be quick getting us the stuff. Anything you want to add on that, Marcus?
Yeah, the one thing I did want to add to it, Jeremy, is just keep it real with us.
Yeah.
Right? There's no reason to try to hide nothing because they're going to find out. If you going through a situation where you need,
tell them that, and say that one more time. We're gonna find out, right?
You're going to find out. Don't hide. The thing about Jeremy is what he's real good at. And you can ask, he's good at solving problems. I'm good at solving problems, right? If you just keep it real with us from the beginning, we make the deal in the situation that you're going through that's thinking that it's a big deal. It's probably really not a big deal, right? So just keep it, because they're going to find out. They're going to find out, right? And you don't want to get 2 days before closing, trying to act like you're working, and then 2 days before closing, they call your employer and say that you're not working there, and the deal blow up. Then you want to go on Google and give me a bad review for something that you did, right? So it's all about building trust.
I just had that happen earlier this week. The buyer lost their job. We were supposed to close on Friday, and he had lost it 2 weeks ago and didn't say anything to us. And we found out at the 11th hour, and then everything fall apart. And like, we can get ahead of that stuff. We can jump through the hoop with you if we know up front. The earlier we know about an issue, the easier it is to fix.
Yes, sir.
Yep. All right, let's go through some do's and don'ts. This is stuff some people have learned the hard way. Let me pull this list up. All right, some do's and don'ts here. Do get pre-approved. Do make all your payments on time. Even once you're pre-approved, keep making paying your bills on time. Just disclose stuff to us. I mean, it goes back to what we were just saying. Any properties you own, any employment changes, like, just tell us about it, right? Just tell us about it. Keep records if you're thinking of buying, or as you're looking for houses and stuff. We may be needing updated bank statements or updated pay stubs. Save that stuff when it comes in the mail. Things not to do: don't apply for any new credit. Don't open or don't change jobs. Don't transfer money around. Don't make large deposits. Don't co-sign for anybody. Now, with that said, some of that stuff I'm totally fine with you doing, but it depends on the scenario. So if you want to change jobs, oftentimes that's totally fine, but call me and ask me first so I can ask you some questions, make sure it's not going to screw us up. If you need to transfer some money around, that often is totally fine, but I want to make sure we do it the right way. Honestly, just before me and Marcus started recording this call, we just had a conversation with somebody that needed to get some cash deposited and was asking questions about it before doing the deposit, and it was totally fine to do, but there's other situations where that could have screwed us up. So it's all about having the conversations. Again, it really just goes back to be transparent with us, tell us what you got going on, and ask us questions. Anything you want to say on this, Marcus? You've seen a lot of the do's and don'ts kind of blow up on people. Anything you want to add?
Yeah, the thing is, right, like, basically what we just said, Jeremy, just like, if like you looking at this list, and if any of this applies to you on the don't side, just have a conversation with me. Like, we are here to genuinely want to help, right? But if we don't understand the assignment, or we don't know what's really going on, we won't be able to help you. You feel what I'm saying? Like, I mean, that's really it, Jeremy. Like, you just gotta let us know up front. Don't try to hide nothing, because like you said, they're going to find it. They may not find it right now, but they are good at what they do.
Yep. All right, so that's kind of everything I wanted to cover. Just to kind of go back through this one more time, right? So you get pre-approved, you find a house, make an offer, sign a contract. We get the appraisal. We send you loan documents to sign. Then we do appraisal, title work, home inspection, insurance. All that stuff happens. We make it through underwriting. We clear the deal to close. You sign your documents at your title company, and then you get the keys. 10 easy steps right there. That's the home buying process.
All right.
Get pre-approved. Here's my phone number. If anybody wants to give me a call, that is the best way to get a hold of me right there, 269-360-7109. And then if you're watching this on a computer or something, you can scan this QR code right here, and it'll take you to an online application that Marcus has out there where you can start the loan application to start that pre-approval process. All right, Marcus, let's wrap this sucker up here. Anything else you want to say to people?
Yeah, the last thing I want to say, Jeremy, is if you're looking at this and you still on the edge, whether you want to or you don't, right? My advice for you is this, right? The not knowing is the part that's hurting you right now, right? If you think that your credit score is bad, if you think that your work history is bad, right? Still fill out the pre-approval process. Because let's just say hypothetically that you're not ready. What Jeremy and his team is going to do is that they're going to give you a roadmap. So one day that you can and will be ready, but not going through with the pre-approval process and you thinking that you're going to get your heart broke I understand what you're saying, but at the end of the day, right? At least you're going to know what to do and what to work on the right way.
Yep. I can't stress that enough either. Like that's what we do is figure stuff out. And even if you're thinking, well, I'm gonna buy in 6 months, like let's start the process now. Let's make sure we're ahead of everything. Like, so
Then guess what, Jeremy? Most of the time, their situations really ain't that bad.
no, it's not. So many people qualify and they didn't think they were gonna. And that's the best, right? Is that not the best when somebody thinks they aren't gonna qualify? We pre-approve them. You sell them a house over the weekend, and 30 days later, they're moving into their new home. Like, that's why we do this, right? So,
Absolutely.
So, all right, Marcus, as always, it's been a pleasure doing this with you, doing this recording and stuff. I truly appreciate our partnership. And, you need anything, holler at me. Anybody watching this video needs anything, call either one of us anytime. We're here to help you.
All right. Thanks, Jeremy, and vice versa.
All right.